Todd, talk to me about these losses for the Hang Seng. Why are we seeing such underperformance today?
Well, Susan, first thing I'd say is the shorts in Hong Kong reached a high of 14% on Friday. That's the highest level we've seen since 1998 when it got up to 19%. So the shorts really have the market in a state of fear. I'll give you an example. The Macau plays were down over 14% on Friday. They underperformed the HSI by 12%. This morning, somebody, or at least the market speculation, there was a rumor that Macau was going to put in visa restrictions again. Now, that makes no sense because usually that's only put in place when Macau is overheating. So there are a lot of rumors getting put into the market, and that's creating more short opportunities for those that are short. But as I've been saying the last few weeks, the market is very cheap, and we're starting to see some macro numbers that are justifying a bull market and a continuation. But what's happening is that China's closed this week, so the shorts can take advantage of that because there'll be fewer amounts of fundamental information coming into the marketplace.
Yeah, it seems that volumes are pretty much in line with the market average we've seen so far this year. So are you saying that markets are oversold and that investors should be going in to buy even these Macau names?
Yes, I've been telling long-only investors and also global small and medium cap funds that now is the time that you should be buying into these names. They're very, very cheap. I think the PMI number that we had over the weekend was positive for China. It was a small beat. I think a week Friday we're going to be getting a September CPI number. There's the potential that we're going to get a CPI number that comes in below 6%. So there's several factors. I mean, I wrote in my daily this morning that some pretty big famous value investors, for example, Warren Buffett, bought $4 billion in stock in third quarter of this year. That's the highest amount of stock that he's bought since third quarter of 2008 when we were in the middle of the financial crisis. In Japan, we have the GPIF $1.5 trillion fund that will be potentially buying emerging market stock by the end of the year. So I am telling the funds to start getting involved now. Don't believe in the fear. And I think once we get past this week of vacation out of China, we're probably going to get money being put to work. Lastly, I would say that the A share premium versus H is now 34%. Anytime that's gone across 20, we've seen a bull market and both A and H shares following within the next 4 months.
Okay, well, you make a compelling case and compelling argument, Todd. Let me talk to you about why investors are ignoring some of the good news that we're seeing in the markets. You're right. It's not only PMI that beats, but take a look at a lot of the U.S. economic data that we got. We have consumer durables, better than expected in August, payroll gains as well, and unemployment claims coming down. But yet the market's still reacting negatively.
Well, yeah, I think what I wrote last week to my clients was that I think because hedge funds have been restricted in their shorts in Europe, they've been looking elsewhere. And I think what they've done is they've focused on Asia and emerging markets to short because, one, we're at the top of the interest rate cycle for China, for India, for emerging markets. The only major that started cutting really is Brazil. So when you're at the top of the interest rate cycle and you're running a tight monetary policy, it's quite easy to throw in stories, throw in rumors, and get short those stocks. But I'll tell you one thing, if Beijing is listening right now, if the PBOC would start at least talking about loosening, and you know, I know inflation's high, but it's going to drop below 6, I think they might get a little more encouragement from the long-onlys, and we could squash those guys that are short at the moment, because there's no reason for Hong Kong and China to be underperforming the rest of the region so much. I think this whole hard landing story has been overdone. I think growth is slowing, but we're not going towards hard landing. And I think China right now is mopping up its problems. It's mopping up the LGFV problems. They're mopping up the shadow banking system. But this is all what you do, and you're at the top of the interest rate cycle. You clean up your problems before your next cycle begins.